It's May 16th. And this is the video log that takes 30,000 to a million. After I take you through the account, I'm going to show you how to 100x your money. And this is a serious video. So, yeah, no gimmicks or tricks. It's possible, but of course, there's no free lunch unless, you know, you rate value and you believe in things like that. So this is the account. I'm going to just quickly run their positions. I know it's very bright right now because it is still after market hours, and Robinhood is white. And I guess that's the setting that I have it on. So my positions are on the right. The daily change is on the right here. The greener the percentage change of the daily valuation of these options, and then the black is the dollar amount. I'm going to just quickly scroll through them. You can pause the video player at any moment to try to find out the exact positions. All the information you need about the options is listed over here on the left. You know, you got the ticker, the option price, whether it's a put or a call, expiration date, number of contracts, whether it's sell or buy. I'm going to scroll through here my equities position at the moment. 750 shares of Apple. Ton of margin right now. I have a ton of margin of taken out in order to hold these positions, and hopefully I get rid of them soon. I'm not bankrupt yet. So here is the investing tab. You can see 41.77% margin, $116,000 borrowed. It's going to be a hefty bill, especially since Robinhood raised their price on the interest. So I'm going to be paying hundreds of dollars for this. So hopefully I make it up in options premium and other ways. Okay. That's the account. Oh, if you want to look at this, this is total return and then sorted by equity. As you can see, Goldman Sachs and Apple comprise like $185,000, and the account's not even worth that much. So some of it's borrowed and the rest of the positions are basically borrowed. So lots of borrowed money here. All right, so on to the topic of today. You know, how do you make a ton of money here in the markets in 2022? Well, I'll tell you if you really want to know. But just like I said earlier, there's no free lunch. The only person that believes in free lunch is this guy right here, Ray Dalio. And what he says basically is that diversification is free lunch. So you make a bet across multiple asset classes, and you know, basically because of inflation and other factors, human ingenuity, etc., you win over the long term. But even that has its problems. You got to figure out the right allocations. You have to make some bets. So you have to like do, you know, he's not. It's not that like set formula that anybody can replicate, right? He makes adjustments to his funds all the time, and more so, he's been a bit underperforming the markets, right, as of late with his portfolios, although I'm sure they're faring a lot better in this downturn than the overall market. So that's that. But you know, when you're making money in the market, I'm making them very slowly. In fact, you know, I'm regressing here in the last few months like many others, but I am making money over a long period of time, and it's very slow. It's a slow process because you got to take in risk into account. So one of the biggest challenges of investing and trading is knowing how much risk you're taking versus what you're doing. But we're going to go into Robinhood right now, and we're going to run through some options, no pun intended. Oh, that, sorry. I'm trying to make this transition happening, but it's not happening. But trying to make money faster than this guy right here. Right, faster than Warren Buffett. So he's amassed a lot of wealth, but over a very, very long period of time. You know, so the guy's like 90 or something. So anyways, we're gonna go into Robinhood, and I'll show you some ways you can do that. You know, the most popular way to 10x your money or 100x your money or anything close like that is basically you buy the leverage funds. You could buy something like this. You can buy the Pro shares, Ultra Pro, QQQs. So that basically tracks the NASDAQ, and it's leveraged like I think 3x at the moment. I don't know what it's leveraged, but it's a very wild position. But you could put a bunch of money on that. And let's say you bought here in the bottom of the 2020 March crash. It was 8.88, and then the pick was 88. So that's 10x your money right there. Moreover, what you could do is you can go into the trade options, and you can actually buy calls in this thing, right? So you can buy calls, and you can really 100x your money, because one of these options corresponds to 100 shares worth of movement at a certain level. To find out how much movement it corresponds to, you got to look at what's called the delta here of the option. So if you buy this option, it's going to only represent 14 shares worth of movement on a daily basis, but that is going to increase if, let's say, QQQ whatever skyrockets. That delta is going to increase and start correlate more and more with the fund. The reason why these options don't correlate as much is because they have a lot of theta decay associated with them, because oh, this one's expiring May 20. How about we try something that's a little further out? Wait, 2020, January 2023. Okay, so something that's a little further out, you can see the delta is a lot higher. It's 0.6233, so it corresponds to the movement of 62 shares in any given day here. And theta decay is a little bit less, but it's still, you know, quite a bit. You're gonna have to buy the premium. You're gonna have to pay money for the premium in order to stay in this position. But it's possible. Look, if this thing skyrockets, right, then you're good. You're gonna make it. You're gonna 100x. So some other ways is just to pick a volatile company. So like, for example, or it doesn't even have to be a company. You can do, you know, what was the leveraged silver ETF? I forget what it was, but SLV is the regular one. There's some other ones, and I don't know why my internet's not working. Okay. Oh, I see. I gotta click it. So SLV, but I think it's VNQ. Maybe is it VNQ? No, VNQ is the real estate. But anyways, there are levered silver ETFs out there, and or you can do JDXJ. I think it was JDXJ or GDXJ. GDXJ junior miners, and that's a very volatile ETF here. You can see. And you could just basically, you know, it's dropped quite a bit from 51 to 40 to 37 in this short period of time. Or you can just do, you know, like a regular YOLO growth stock. Like you could probably do it on PayPal at the moment. PayPal, let's say, if you think that it's coming back in a year to its previous highs of 300, you could just buy a bunch of what they're called LEAP 1-year options. Or you can just roll short-term call options. So what that means is, like, you go into the options, you buy a call, you know, let's say expiring May 20th, and let's say you buy this call for 264, and once Friday comes along, you could actually, there's Robinhood actually put in an option to roll the option. So you click the roll button, and then it will, let's see if I can actually show you. So I have these are just cells. Okay, Baba 250. So this option here, I can roll it, right? I can pick a different date. This one's March 17, 2023. I can pick a further date, and I can actually roll the option, pick another option. The internet's very slow. Pick another option. What it's gonna do is gonna sell my previous option, and then it's gonna buy the next one that, you know, I'm trying to roll. That's basically what you could do it manually, but Robinhood can do it within a single execution for you. So they even do this for you, so you can do rolling options all the way throughout the year and just hope that you don't have a lot of down days. Now, all these things are going to actually 100x your money, but you have to keep in mind, like I mentioned 2 times already, that there isn't a free lunch, and you have to be aware of how much risk you're taking in order to put these positions on. So, like for example, if you want 100x your money, it's going to be equivalent to putting down, a bunch of chips on just one number on a roulette table. The odds of you actually pulling this off are very, very, very slim. So, making $10,000 into $1 million in a year is going to be very slim odds, and it doesn't really come down to skill. It does come down to luck. I mean, you will not be able to skill your way unless you take some major risks all the way to 100x. So perhaps you have some inside information on some growthy company, some company that's very volatile, and you have some insight that people in the markets generally don't. You could really load up and do it, but things happen. I mean, unexpected things happen. Maybe somebody else has that information. Maybe some of it's already been priced in. Maybe the market makers notice the activity. Maybe the banks shut down trading because of whatever reason. So there's still quite a bit of risk, even if you have insight. I think the most important thing to do is in that situation is to figure out like how much risk are you actually taking, and your ability to assess your own risk level, I think, is gonna give you a return. You could then kind of arbitrage your risk, right? You can say, okay, well, market's thinking that I'm taking 1 in 100 chance, but I know this is more like a 50-50. Okay, this scenario is gonna materialize, whatever scenario you have in your head. And so you can put on that trade. You can take that 50-50 gamble and hope you're right. However, by the way, you can also do this on the downside. I've been talking about buying calls, but you can also just buy puts, right? If you think that all hell is breaking loose, markets are going to crash all the way down to like another 50% in the next few months, you can make a ton of money doing that. You can roll some put options. You can buy some leveraged, you can buy call options or to negatively leveraged ETFs, right? That track the inverse movement of the stock market or individual stocks. Robinhood doesn't give you the ability to short stocks directly. You can buy puts, you can sell calls, but you cannot actually short a stock. Shorting a stock is when you borrow shares and you sell them in the open market with the hope of buying them back at a lower price and then keeping the difference. That's what shorting is. So you can't really short on Robinhood. You could probably short on different platforms like Interactive Brokers, maybe E-Trade, and etc. But anyways, those are some of the ways that you can 100x your money. Like, if you want to do it with 1% of your money, then that's kind of reasonable. But if you put everything you own into these type of strategies, I think you're asking for disaster. It's a bit suicidal, but I'm not going to tell anybody how to live their life, right? So of course none of this is financial advice. I'm not a financial expert. I'm just a person like you, operating the markets, trying to do the best I can and keeping track of it with a video log whenever I can. So best of luck in your trades. Hopefully that gave you some ideas of what you can do if you're really hard set on gambling, and perhaps lose your money on Robinhood. But or you can take a safer route. You could try that risk arbitrage thing and see if you can make some money that way. I make money, selling options for the most part. So I take the inverse trade of what I'm suggesting. Most of the time I try to play the casino and not the gambler. But that comes with its own risks as well, right? Whenever there's a big movement in the market, I lose money, get stuck with collateral that I have to then work through. So it's not that easy to be in that side of the trade either. The people that win in active trading mostly are, market makers, big banks, brokerage houses, etc. Or high frequency traders or flow sellers. What a flow seller is when Robinhood does this or did this, they probably still do. but they still flow to high frequency traders and other institutions. What that basically means is that our trades, retail sells and buys, get sold. Those transactions get sold to somebody else to execute, because they can either front run it or they get some kind of benefit from that information down the chain of execution. And all this happens really, really quickly, and a lot of people are benefiting from our inability to do limit trades, right? So whenever you execute like a market trade, for example, it probably influences the market a little bit. That order gets sold to somebody else to execute. But you can, by the way, you can completely sidestep that if you are setting limit trades and you're happy with whatever that limit is. So let's say, for example, I want to buy, I'll show you on Robinhood. It's getting a little off topic, but it's fine. So let's say I'm trading Apple and I want to buy an Apple share, right? What's going on here? Okay. Oh, so it's asking me dollars or shares. All right. This is interesting. It's new. Okay, so let's say I want to buy one share. So the market price is 145.42, right? But what I can do is I can do a limit order. Oh, it's over here. The button's up here. Okay, so, and I can enter a limit price. On the phone, it's a little, I think it's the little cog at the top right. And I can enter the price that I'm willing to buy the share at. So let's say 145.4, right? And so the trade won't execute unless it can fill in that exact price. So I'm basically setting a limit and saying, no, I will not pay more than this no matter what. And I'm completely sidestepping this issue of, order flow and worrying about my execution price not being as good. The trade might not fill, right? It might not fill, but I know that I'm not overpaying. So I suggest everybody use limit trades for entering and exiting out of positions, even though it's a little bit, requires a lot of patience. I think it's going to be better for you to not get skimmed off the top a little bit. All right. So that's my pro tip of the day here. Okay. All in all, hopefully you got some ideas here. But again, I got to warn you against gambling. You can lose everything very easily in the stock market. So be careful how much risk you're taking. All right. That's it for now. Peace.